Welcome to the first episode of what is going to be a new beginner series on this channel, where I talk through everything price action related. We go all the way from the very basic market structure all the way to advanced concepts and advanced psychological tips and tricks that can help you actually become a consistently profitable trader. So in this video, we're going to talk about market profiles, market conditions, how to spot them, what characteristics they possess, and how we can actually benefit from these conditions. So without further ado, let's jump into the charts and get stuck in. So we have 4 different market profiles, 4 different market conditions. And the first one is consolidation. Second one is reversal. Third is retracements. And fourth is expansion. Now we're going to go through each individual one, their characteristics, and then we'll go through some examples and we'll talk kind of through charts together and how we can identify them and kind of where we want to position ourselves and what we actually want to participate in. Now this video is not really going to go too much into depth of trade executions or anything like that. We're merely looking at conditions here and the most optimal conditions for us to trade, because as traders, we are trying to get probabilities on our side. We want to trade in the most probable conditions. That way we actually have an edge and can exploit price action. So the first condition we're going to look at is consolidation. Now, consolidation is where essentially price is trading within 2 key levels. It's unable to break, it's simply bouncing from top to bottom. Now, with these, price action profiles, we like to call this liquidity building, because it's building orders, it's building anticipation, where either side is going to win. You're either going to have a big breakout and price is going to rocket higher, or you're going to have a big breakdown, or you're going to have what's called fake outs and reversals, but we'll explain that in other videos. So this is simply a range bound market, like I spoke about, which is simply trading within 2 key levels. No one's really winning the fight here. Again, this is going to be a low volatility environment, not typically something we want to be involved with. It's very easy for us to get chopped out of this market. This is a condition slightly targeted towards the more advanced traders, where you can actually trade, selling at the top of the range and buying at the bottom. But again, it requires slightly more discretion, slightly more experience. But for now, we want to focus on not trading these conditions and basically waiting for expansive phases, which we'll talk about later. Next up, we have reversals. Now, a reversal is an order flow transition after an expansion. And typically reversals happen after we reach key levels. As you can see here, we have reached this key level. And what very often happens is we have this, what's called a reversal, after a big expansive move into a key level, and then we have a reversal back into the range. Next up, we then have retracements. Now this is simply a counter trend correction within structure. So we're trading with the trend, and what we're basically seeing is an opposing move against the overall trend. And we're looking to actually continue in the overall direction. Next up, you then have the final expansive phase, where this is a volatile move and it's one-sided, and it's where price displaces with direction. It displaces away with aggression, and it's very one-sided, it's very volatile, and this is the moves that we really want to be involved in, because everything else is slightly more advanced, it's slightly choppier, whereas these expansive moves, they're very one-sided and they're easier to get on the correct side of the market, because it's clear and obvious where price action is moving. It's big, full candles, small wicks, and these are the moves that you can really exploit the market and get into these big price action moves. So now that we've identified those key market conditions, those key market profiles, what I want to do is go back in time and look at a few random examples that we can go through together. 1984 is probably not the best data. Neither is 1981. Neither is this year. Wow. Okay, this is a bit better. So 2022. Now, obviously this is in hindsight, but as a beginner, as someone new to trading, you want to expose yourself as much as possible to the charts, spotting patterns, spotting characteristics, spotting all these different nuances that will grow as your experience gains. Now, when we look at this chart, there's a couple of things that we can notice. And if you want to, go ahead and pause this video now, annotate all of the consolidations, the expansions, the reversals, the retracements, draw it all on, and then come back and we'll go through each one together. Okay, so we've all got it drawn out now. I'm curious to see what you drew in and what you didn't, but let's actually just talk about this, and I'll show you what I saw, and then you can see if that's what you saw. But if not, that's totally okay. It's all about learning and recognizing different phases and cycles, and each individual's interpretation is going to be slightly different. This is why you have to spend time doing this yourself and not just listening to other people or taking advice from other people. So first thing I noticed was this expansive phase. Again, big candles, big full candles, small wicks, pretty standard there, right? Typically what happens after these big expansive moves is a reversal where price comes back to quote unquote fair value, where traders agree that this is a fair price to transact. And that's what happens when we get this consolidation phase, because traders are happy to buy, happy to sell here. No one, there's no real liquidity grabs, liquidity sweeps or anything like that. Then what we see is a reversal pattern, which again is a big expansive move into typically a key level, and then a reversal, which what I like to call a V-shaped recovery, where you get one big move in and then an opposite move in the opposite direction. And that gives us that reversal phase within there. And then typically after this reversal phase, we do have a small retracement here, again, within structure. And following that retracement, we have, again, another expansive phase. What follows after the expansion, a key level being reached, and then price consolidates within that key level. Traders are happy to trade within these levels. No one's really too confident. There's been no liquidity event, so people are just happy trading within here. And then same thing happens. We get a move above these highs, we get a fake out, a reversal, big expansive move out of it, and then an equal and opposite expansive move back into that range, confirming the reversal. Then again, a small reversal, a small retracement, back within structure, respecting key arrays, which again we'll talk about in other videos, and then price moves into that expansion. So that is the key market profiles. Again, you will have to spend time doing this because the market doesn't always look like this. This is a very perfect example. I know it was chosen at random, but this is a hindsight example. This is a very picture perfect example. So as you go into the market, as the days go by, just ask yourself the question, what market profile are we in? What are we likely to do next? And all of these questions that you have to ask yourself, because that builds experience, that builds, pattern recognition, it builds subconscious recognition, and then you can start spotting these conditions without even thinking about it. So that is it for the market conditions, market profiles video. Again, keep this as simple as possible. Don't try and overcomplicate this just yet. Simply focus on the candles, focus on the market structure, go back into TradingView, get the replay tool out, replay price, forward play price, and then just identify all these different characteristics, see if you can spot what's going to happen next. And over time, you build this pattern recognition, you build this subconscious, you won't even have to think about what market conditions you're in, because you'll be able to spot it immediately because you've spent so much time identifying these different market conditions. So spend as much time as you can, and I'll see you in the next one.